Hey, how's it going, everyone? So today we are going to be taking a look at my portfolio over here and actually talking about some changes that we've done here just in the past little while since our last update. You can see our current portfolio is sitting at $64,420. For the day, we are down just a little bit, but with the markets kind of moving up and down pretty extensively, we're seeing some pretty huge shifts in our portfolio as a whole. So you can see here in the last week, we're actually down $8,300, which is about 11.5%. And that's a lot. Like, that's a lot of money just in the last week. We have been obviously putting in quite a bit more in this time frame than we have probably, I would say, in early 2022, just because the markets were kind of at all-time highs. So we usually slow down on investments. But when everything is kind of going down and we're in these kind of bear markets, we're throwing more and more into our portfolio when we can, obviously making sure that we have money set aside still. So yeah, let's kind of talk a little bit about this because I like showing my portfolio. I was showing it when it was green. I'm showing when it's red, and trying to keep up with these updates. So you can see right over here, if we go to the month, we're actually down about 7,100, which is about 10%. We actually put in almost $5,000 over the last month. So we, like I said, are putting in more and more money when the market's dropping. And yes, we're putting money in and the market keeps dropping. We put money in and it keeps dropping. So, I wish I knew exactly when the bottom was. A lot of people have more predictions with, a recession coming into play, and that can have a large impact as well. But, I'm just sticking with it, constantly investing. Some of these prices are just so good that even if they keep going down, I will keep buying them. If we go to the quarter, you can see right over here, we're at about 10,500 as far as, down. And then that's about 15%. We put in about almost $12,000 over the last quarter, which is pretty great. And then if you look in the last year, we're down about almost $14,000 in total, but we've put in a huge chunk over the last year. So you can see my chart's a little off the screen here, so let me kind of zoom out. So you can see here, huge change over the last year. And then if we go to our all-time, we're only down about $7,500. And I say only because with how the market's been moving, that's actually still a really good thing. One of the things that I like with M1 Finance and like this number right over here, well, let me just actually erase everything. All this right here is that some of this will also include things that I've sold for gains over that time period as well, which I actually just recently sold a stock as well too, which we'll talk about. I didn't sell all of it. I just sold a small portion of it because it is actually one of the only stocks that is not at their 52-week low. And I put it towards some of the other stocks in my portfolio. So but you can see right over here, started off very slow and then we started investing a lot more. So for most people, I like to show that I started this account with $100. I was starting in with like $10, $20 a week and then just kind of kept moving up as I got more comfortable. I definitely don't think I would be putting in, like if we go back to the month, I don't think I would be putting in, $4,000 in a single month if I hadn't already begun the process of getting it started with investing, because I just wouldn't feel comfortable the same way I feel comfortable now, knowing what I know, knowing how to do research, paying attention to the companies and, listening to calls and just looking at numbers as well. So huge thing to do is just honestly get started. And this is actually a great time for a lot of people, believe it or not, to actually start investing in the market now because it's down so much. And if you do want to get started, I am using M1 Finance. This is essentially my main account aside from my retirement. So I'll have a link for you in the show notes. They always have a nice bonus for my viewers. So if you guys want to check that out, help support out the channel, but you get that nice bonus to get started with your account. So like I mentioned, I actually have some changes that have happened in the portfolio. One of which is actually I'm down to 18 holdings. So at one point I actually had at one point I think almost 45 holdings, and then I kept knocking them down. But for the longest time I was at 19. So I recently sold one stock, and I'll show you guys what that is. And then just even the last couple of days, I actually sold a little bit of one company that I'm still holding on to. So if we go to the unrealized gains, I don't know why there's an issue with Meta right here, but I'm not in the positive with that, I promised you. I'm actually still in the negative, so ignore that right now. But with being in the positive, I only have a couple companies, a very small handful out of the 18 that are still in the green. So I got like Tesla, I got Lockheed Martin, I got Discover Financial, Costco, and then I also have Apple. All of those are still in the green. Now I have a few other companies that are technically considered in the green as well, because I've earned dividends during that time process of actually owning the stock and then getting paid out dividends. And I'll show you exactly right over here. So in my real estate fund right here, you can see I have Airbnb and I have NRZ. So NRZ right over here, I have an average share price of $9.69 and it's currently at $9.10. But because I've gotten paid out a pretty hefty amount of dividends from this stock, I'm actually technically still positive in the holding. So if I sold today, technically I'm selling at a loss when it comes to the stock price, but I still have over $72 in gains because of those dividends, because obviously those are locked in. I already got them paid out and whatnot. So that's kind of the thing you can look at too, is if you have some dividends in your portfolio, they might lessen the blow of, you know, the market being down so much in comparison to some of the other companies. I think it's the same might be true for Microsoft. Now I'm actually in the red, never mind. But I'm pretty close because I have, so the market's down about 224 for me, and then I've had gained almost $76 in dividends from the stock. So in the future, eventually, if it, you know, recovers and then goes down again, I should probably see that being actually in the green, even if it's in a down market overall. Now, before we continue on, if you're somebody who has some private student loans that have some really high interest, I want you to actually check out refinancing your student loans, because one, it's entirely free to refinance with Earnest, which is a company that I work with, and two, you can actually save some good chunks of money every single month by getting a lower rate, and hey, you can use that money to invest more in the stock market. I'll have a link for them in the show notes down below. You can check out, help support out the channel, but you actually get a nice bonus for using my link, and it takes about 2 minutes to check your rate. So just check it out, see if that's going to be the case to be able to lower your interest and use that extra money for more investing if you wanted to. All right, so let's actually go into the holdings really quick too, because I was showing you the positives, and let's go into the negatives real quick. And again, Meta should technically be here too. I don't know why there's like some weird stuff going on there, but Square right over here you can see is our biggest down trend right now when it comes to performance. So we're down about 60%. I have an average price of $150, and I believe they're at like $90 or $67 a share, give or take. Let me actually double check that real quick. About $60 a share. You can't see it on screen, but I can. So it's about $60 a share as it's recording. So every time I'm buying in, it is obviously really having a huge impact on my average price right over here, which is nice. Airbnb took a huge tumble over the last couple of weeks. It was actually still in the green midway through, I think, like March, and then it started to tumble with everything else. Ross, I'm down pretty significantly, about 38%, but I'm definitely bringing down that average price, which is always really nice. And then you can see here, Amazon actually just recently did their stock split, so now I am sitting at 45 shares. They did a 20-to-1 split, so for every one stock you had, you got 20, and obviously I had a little over, I think I had about 2 shares right before the split, and then I've bought in a few more since. My average price now is $141. Let me see where they're at. I know we can't see them right here on the screen, but I could zoom out a little bit. Nope, it still won't show it. So it's $102 a share. So I'm definitely still able to buy and really have an impact on that average price. You can see I'm down about 27% on that. Then we got Texas Instrument, and I'm down about 12% on that one. And then Visa down about 10%. I'm a little kind of with Visa in my portfolio at the time, but we'll see if I want to continue. Home Depot, I've been buying quite a bit in this portfolio. You can see here we're down about almost 10%, actually, well, about 9.11%. So I've been definitely buying a lot more into them. Google right over here, we're at 2.78 shares. They're also doing a 20-to-1 split. So eventually this will actually be a much larger number. Obviously it doesn't change the fundamentals of the company, but just kind of changes that perspective of like how many shares we have. We're actually down a little bit on them. Not too much, but I'm actually buying pretty heavily into Google. I love Google. Obviously I make videos here on the YouTube platform, and I love a lot of the things when it comes to just their numbers and everything else that their books have. It's just one of my favorite companies, so I've definitely been buying a lot more. I actually want to make this one of my top holdings, and I'll show you kind of where everything is based off of value. I haven't really been buying anything into Next Era Energy for a while. I've just been holding them at this point. And then Ally Financial, I'm actually in the negative now. This was a stock where I bought it during the big crash in 2020, got it for a really good price, and then it went up significantly, but it's kind of back down to where my average price is right now. So with the dividends paid out, I'm a little bit close to break even, but still planning on holding them long term. And then Microsoft, I'm almost at 30 shares, but technically in the red with Microsoft, like we were just talking about. But like I mentioned, if we actually go to the value, so my top 3 holdings are Microsoft, Apple, and Home Depot. Google is fairly close behind. If you see that, like, we're just adding more and more into the holding here. So I wouldn't be surprised if eventually this kind of starts ticking up, especially once the market kind of does a recovery, even if it takes a year, 2 years down the road. I wouldn't be surprised if Google ends up becoming probably like my number 1 or number 2. Obviously, right now it's Microsoft and Apple, but not by too large of a gap as it used to be, because you could see here the value that I have for Microsoft is about $7,300, and then with Google it's about $6,000. So it's about a $1,200 difference, but I mean that can change pretty dramatically. Microsoft hasn't taken as big of a dip as it has with Google, so we're gonna see hopefully some really nice gains over some time. And then Amazon right over here, like I said, it's down about 27%. I wouldn't be surprised if this one just like takes up as well once everything recovers. And that's actually something I have to consider as well too, because even though I've been mostly focused with dividends for the longest time on this portfolio, just over the last like 6 months, since the market's been taking this tumble, I've actually been investing mostly into my growth fund right over here, which is not dividend focused, of course, but I always mention on these videos that either one, in the future when I do want to use this money in 13, 14 years, if these companies start paying out dividends, great. If not, then I can sell these companies hopefully for a decent gain and then put that money towards companies that are paying dividends. So this amount right here, if we actually go, let's look at the last quarter. Yeah. So if you look at the last quarter, the net cash flow into this one right here is significantly higher. It's actually a good chunk of the money that I've been investing, just because I do believe in these companies. Their numbers still look great, and yeah, they might be down for a while and they might still go down more, but I want to get them at these prices that I can, because they are at such great prices. Even to the point where I haven't been buying a lot of my Tesla stock. So Tesla has actually gone down significantly from my target, which was 27%, down to about 19.4. And again, that's because I've been putting so much into Meta, Amazon, and Google. Probably every single deposit I've been making, some money is going into those stocks just every single time. So we'll see here that my actual for the growth is 27.3, and then you can see that the target is, well, now it's 25, but at one point I think it was like closer to, I would say maybe like 22 or so, because my tech pie used to be the highest percentage, and then that's also taken a small tumble. But Microsoft and Apple, which are in the tech pie right here, haven't had the same levels of drops as Amazon, Google, and even Meta, and so I wanted to take advantage of those. So what might end up happening, and if you're following along, just make sure you're subscribed, because what we might end up doing is eventually, when things kind of recover, depending on how much my growth stocks actually grow in comparison to the rest of the portfolio, I might even actually go through the process of selling some of this off to invest in some of these other pies and sectors that I have in my portfolio, if it deems it too large of a percentage over time, which is actually something I just recently did too. So if I go over here with my morning trades, very recently I actually sold about $590 worth of Lockheed Martin. So you could see here, it's a little over almost about 1.4 shares that I had. And the reason I partially did that, that's actually a little under, or actually a little more than what the profits have been so far from the gains. So essentially I'm taking some of those gains and putting them in the companies, again, the ones that are, down a little bit more significantly, and actually getting some hopeful advantage of selling one stock that's, at its high points right now, and then buying in on the companies that are at their lower points, because I'm going to get more value when those ones come back, versus if Lockheed Martin goes back up, it's probably not going to go anywhere close to the way these 3 to 4 companies are going to go back up over the next, again, 6 months, year, 2 years. And so we'll see how that impacts it, and if that's going to be a good decision long term. Because if I go into Seeking Alpha, so let me see if I can zoom out. Do I have no, I don't have a I have to see if I can just kind of go here. So I have like a 52-week thing because this page here is really, really wide. So I won't be able to see it, but you can see the 52 weeks right over here on the right-hand side. So if I went to Lockheed Martin, you can see this little dot right over here. It's kind of towards the center. So this is actually Lockheed Martin is currently right now almost like right in between its 52-week high and its 52-week low. And then if you look at all the rest of the dots, for the most part, aside from Costco up here, all my other stocks are at their bottom of their 52 weeks, which is pretty significant. And so that's partly why when I was looking at my numbers and deciding, like, do I want to just hold Lockheed Martin, or do I actually want to take a little bit of those gains and then put them towards companies that are, like Amazon right now, very close to like $100, and then get some more value as it hopefully in the future goes back up. Based off of those numbers, it looks like it will be the case, and get a lot more of those gains than, Lockheed Martin going back up to its 52-week highs. So I ended up selling out of that and kind of going through that process. That's actually not the first time I've done it, but that's one of the very few times where I sold a little bit of a company, still holding them long term, and using that profit towards other things. And you can see here, I've been doing quite a few buys. And I'm not trying to do large buys all at once. I'm trying to do small ones here and there. So I'm doing like 500 here, 200 there, 500, 600, just small amounts where I'm just putting in money as I go. If I wanted to take huge chunks, if the market keeps going down, then it's going to be harder if I'm tossing in a lot at once versus smaller amounts. And then I can do a better dollar cost average. And so if we go into like the buys here, you can see, we got like Meta, Amazon, Microsoft, Square. I actually put a little bit into Airbnb, NRZ, and then Google as well. And then the one before that, Amazon, Meta, Square. So I'm just trying to toss in money when I can and get those purchases because the prices are so great in comparison to where either some of them I'm dollar cost averaging pretty heavily, like you saw there. Obviously with like Meta right now, unfortunately, the data is kind of like screwed up on M1 Finance, but like every purchase I'm doing, it's really having a huge impact on my average price point. Same thing with Ross, Amazon. Those ones are having a huge impact. Some of these not as much. Like I put a little bit into Discover for the first time in, I would say like 6 or 7 months. I haven't bought a lot into them in a long time, but they've had a few big drops recently. So I put in about $100. That actually increased my average price, which is fine. Not the worst thing in the world, but if it continues to go down, I might actually end up buying more of Discover. And then let's see. Oh, that was a dividend that got paid out, and I did get obviously some dividends paid out during this month already. You can see the stock split on Amazon down here, so which is really cool. But with my dividends so far this month, I've only gotten paid out a couple. It should be one of the better months. So by the end of June, I should have, I think, a little over $120 in dividends. I gotten about 29 so far paid dividends. So I have one other sell that I did. Let's see, position change. Nope, those are just stock splits. I'm trying to remember which stock I just recently traded. So we go to sell. So it's right over here. So this was back on May 31st. So this was just a little bit ago. But I actually sold out completely out of Digital Realty Trust. Part of that is as a dividend investor in some degree, because now I don't feel as much of a dividend investor. I'm still goal for the long term, so follow along if you are wanting to see that stuff. But we'll see how this ends up working out in its entirety. But I just didn't feel like DLR is going to be able to be consistent with payouts just based off of how they're kind of moving forward. So I decided to sell out and then put it into about 11 different of the shares that I have already in the portfolio. So this is how it broke down. You could see with Home Depot clearly having some of the most, almost $300. I wanted to make sure that some of these went into stocks that were also paying out dividends, because if I focused all on that face or Meta, Amazon, and Google, it would not have as big of an impact on my dividend growth, which is fine. Because again, dividend growth is focused for the next 13, 14 years, not today. But you could see, even Google got like a huge chunk. Ross, Amazon, even Discover on this one, Apple, Microsoft got a good chunk, and then Meta had it as well too. So that was actually essentially fully removing this stock from my portfolio to be able to do that. And that's okay too. Like, I think for some people, they have that fear of, if I buy something, I don't want to sell it anymore. But if you are paying attention to the numbers, if you're looking at the data and you're saying, you know what, this stock doesn't make sense for my portfolio, maybe at the current time, don't be afraid to sell. That one actually sold for a profit, even with not including dividends. So I was able to have a little bit of in the green to sell that, to buy into stocks that are at that point still were in the red, even in May, for those as well. So making those decisions, I didn't want to do anything quick and easy to just say, I just want to get rid of it because it's in the negative. I have plenty of those stocks. You saw that my Square holdings, if I go here, my average price is that almost $151, and its current price is $60. So if I didn't believe in this company anymore, or if I didn't think that the numbers were going to look great for the long term, I probably should have sold a long time ago, but I kept saying, you know what, this is a good company. When I was buying it, I think my original average price was like $190. So being able to buy them at $60 a share, or within that range, I'm just getting a better and better deal for the price that I would be willing to pay for this company. And those are the decisions I have to make, but I don't want to be irrational about them. I don't want to make quick decisions. So when I sold DLR, that was very intentional, and I probably sat on it for like 2 weeks to really decide if I wanted to. And then selling a little bit out of Lockheed Martin was another big decision that I had to make, of like, is that something that I want to do? Do I want to get out a little bit on this company to be able to go buy the other companies that have higher potential for that growth, and then maybe sell a little bit of those companies and put back into Lockheed Martin when the stock goes back down in price? Because that'll most likely happen. Obviously, it's no guarantees. I can't predict the future. That would be cool if I could. But you could see, Lockheed Martin, just like a lot of other companies, have their ups and downs. So I'm, looking at this and saying, okay, with how the market's going, is there a chance that Lockheed Martin can have a significant drop? Because year to date, they're actually up 16.5%. Not of a lot of companies, as of right now, with this recording and the markets the way it's going, or the markets and the way they're going, are anywhere even close to being in the green for year to date. So I'm looking at that as saying, let me take some of these profits, put them towards the other companies, and maybe in the future when Lockheed Martin is down, maybe back, to like, let's say 333 or something like that, I could buy again, either by selling some of the other companies that are maybe in the green at that point, or just whatever amounts that I have in cash available to buy. Because when I sold, let's see what I sold it for. I sold it for $422 a share. So right now it's at $412. So I already saved a little bit, because you could see it's down about 11 and a quarter. So I already sold it at a better price than where it's currently at. So I could have even bought back in and had a little bit of that gain as well with buying it at a lower price point. But those are decisions. Like I said, I don't take them lightly, and I actually sat on it for a little bit. I probably could have sold, obviously, a little bit higher price point, but I wanted to hold off just a little bit longer, and I did. But I finally pulled the trigger on that one to be able to take some of those profits and put them into more buys. Now, I want to actually hear from you in the comments down below. Let me know, how's your portfolio doing? Are you in the red as badly as I am? Or is your portfolio maybe a little bit more conservative with some of the companies that are in them? And if you are, investing constantly week by week, I like to hear from people in the show notes, or in the comment section, I should say, down below. And I'll actually put up another video right over here, so you can keep on watching videos and content here on the channel. My name is Dennis, and I'll see you in that next video.